Hello, welcome to this week's economy. I'm your host, Dr. Vance Ginn. I hope you're having a prosperous day. Today, we've got a lot to discuss as we usually do every week, and this is another day, right? And so we're going to have September 28th, 2023 is today. Remember, you can find all of my information on my website, vanceginn.com, where links to my Substack newsletter and podcast outlets and everything else. Kind of a one-stop shop. And remember, check me out on x.com at Vance Ginn, where I post a lot of information about what's going on in the economy throughout the day. So don't miss me there as well. On the previous LPP episode, the Let People Prosper show, right? That's the main thing that I have on Monday mornings that comes out every Monday. We had Taylor Barkley of the Center for Growth and Opportunity to talk about abundance in the economy, digital parenting, social media, competition in the technology market, and the government's role in all of this. It's a really great discussion that I hope you'll go back and listen to it if you have not already. It's a great episode with Taylor Barkley. The upcoming Let People Prosper episode this coming Monday is going to be with Naomi Lopez, longtime friend. She knows a lot about healthcare policy across the states and really what to do about it, what's happening in the healthcare market. It's a really good discussion that I hope that you'll check out and share with your family and friends. All right. So let's get right to it. Let's talk about what's happening in the economy. And on the national front, the big news that's happening right now is the federal government shutdown. Will it happen? Will it not? It could happen at the end of September if they don't pass a continuing resolution, a budget bill. Of course, they haven't passed a budget in decades. And so really what they do is they'll just pass these continuing resolutions to kick the can down the road a little while and then come back to this again. My guess is that they'll pass something soon that will get us through the end of 2023. And then they'll renegotiate this right at the end of the year and punt it again for something in the future. Remember, this is the same time when they've added more than $1 trillion just since the debt deal a few months ago, just a couple months ago, really. And now we're over $33 trillion in national debt. A lot of that debt is rolling over. It's going to roll over into higher interest rates, which means the net interest payments on the debt are going to continue to grow at a rapid pace. And we're basically paying down debt with new debt. We're essentially insolvent, guys. And I mean, at the same time, we've got the Federal Reserve printing a lot of this money over time, which we've seen the inflationary pressures, which I think are still out there and are going to continue to cause some havoc for households and the economy as a whole. So that's something else we want to keep an eye on. Also starting on October 1st. So we could have this government shutdown going on, rightly or wrongly. And there's a lot of good discussion that's happening with that shutdown. I mean, at some point, we've got to get this excessive spending under control, okay? But the other thing that's happening is that the student loan payments are supposed to start again on October 1st. So in October, if you've got student loans, you might want to check it out because you probably are going to owe. And if it's an automatic payment, it might be coming right out of your bank account. And if you haven't been budgeting for it recently, then that might be an issue. So make sure that you're aware of that. Make any changes that you need to make. Look at if you're at a nonprofit or a government entity, there's the Permanent Student Loan Forgiveness Program, where if you pay off 120 payments of qualified payments, then that rest is forgiven. Remember, it just goes on to other taxpayers, including you, but that is an opportunity that's out there if you can take it. The other thing is that this is going to hit a lot of families hard, right? If they haven't been budgeting for this amount of money, how much ever it is to pay their student loans monthly, and then their budget's already tight, how are they going to come up with this amount? So there are some ways that you can get around that. There's the new SAVE program that's been put in place by the Biden administration to help folks out. But I really just want to make sure that you're aware that that's happening. And at the end of the day, this could be postponed even more if there is a government shutdown, which doesn't mean they shut down everything. It just means that there are some things they're not going to run during a period of time. And what they'll probably do is just backfill any of the spending or any of the federal government employees who are sent home for a while or something else. But the student loan payments could be suspended longer depending on if the shutdown happens. So that's something else that you'll want to keep in mind. But the economy overall is in trouble, right? And some of that has to do with the student loans, and that's going to hit households hard. They're not going to have as much to save and spend throughout the economy. And so that is going to influence them. And a big part of this is where Andy Puzder has a nice tweet showing what's going on with the overall economy. And what he says, that another Bidenomics disaster, depleted savings for the bottom 80% of U.S. households by income, bank deposits, and other liquid assets were lower in June this year, 2023, than they were pre-pandemic in March 2020, even after adjusting for inflation. And that's from Bloomberg. And basically what you can find is the household incomes from 0 to 40%, so the lowest 40% of income, households, they had an increase in their real household savings, so adjusted for inflation for a while until about March of 2022. And even the next one, the 40 to 80%, that group, they had positive savings, a lot of positive savings until about March or April of this year. Now, the 80% plus, so the top 20% income, they still have a lot more in excess savings than they did before. Then when you look at the stock market, other things that were out there. But remember, a lot of this was driven by all the handouts and the checks and unemployment benefits and everything else that people saved and stocked for a while. Now, with inflationary pressures, the excessive spending that's been happening and everything else that's going on, that's depleting their savings quickly from households. And now that I think that's all going to come home to roost very quickly as they're not spending. We're not going to keep up. So that means less production as well. And if we have less production, that's less economic growth and jobs. So I think this is really where you start to see even more of the unwinding of the weakness in the overall economy. So that's something that we'll want to keep, an eye on here. The next thing I wanted to talk about is there's a poll that was put out by Center for Growth and Opportunity. They're at CGOUSU on X.com. And they have a good poll that's out. There's three main takeaways that they have from the latest edition of their tech poll. Number one, Americans continue to have significantly greater levels of trust in Amazon, Google, Microsoft, and Apple than any level of government. So we hear a lot of noise about what's happening with quote unquote big tech, but the government is really where the problem is, and people really know that. So there's a lot of good stuff there they have. Number two, from the report, when it comes to concerns about artificial intelligence, AI, Americans are most worried about job loss and national security and least concerned about killer computers and bias that's going on. So there's a lot of talk about AI, what the future is going to hold with it. But we've also got to make sure that we're not just looking at the bias that's involved in things, but think about how really this could help bring about more abundance that Taylor Barkley and I were talking about recently with new AI and things that we may or may not have to do in the future. But there will be some trade-offs that we need to make sure that we consider and not have government influence it along the way. So we need permissionless innovation. Number three, across the board, people increasingly disagree with ID-based age verification to access social media platforms. And that's also quite interesting because we hear a lot of noise out there saying, oh, people want this and we need more digital parenting. And it's like, no, people really just want to parent their kids, government to get out of the way. And so there's a large portion of them, more than half, say, would you share your ID to access social media? My ID, it says less than half or more than a majority say completely or somewhat disagree. If you want to share your child's ID, it's about 78%. So 3 out of 4 people are saying, no, I don't want to share my child's ID. So that's something that we also want to consider with all this push for laws across the country. Another thing that's been interesting to me on the national front has really been what's happening with the labor market. And there was a good Wall Street Journal article, a couple of them actually, talking about the labor shortages that are going on that I think we really need to consider. And what's interesting about this is that, whenever you're talking about what's happening in the labor market, is there has been this void where there's more job openings, the number of people who are even unemployed. So a lot of people aren't looking for jobs. Some of them started to come back, which is good. I think because of the safety net programs have started to expire that were really expanded during the pandemic time and the emergency health declaration and everything else, made it to where more people could be on these programs than ordinarily would be eligible, which was not a good idea. And there weren't any work requirements or anything else. So what would their incentive to be? To not work. Well, part of the discussion here on the Wall Street Journal article was that legal immigrants are filling a lot of that void rapidly. There's been an increase in number of people who are immigrating now to the United States legally, but are also contributing to the economy as the share of the foreign-born share of U.S. labor market is now up to about a little over 18%. It was as low as 15.2% in 2006. And so that's something to look at, but it also shows of where the dynamics are in the economy and different skill sets. Remember, there's not just one labor market. There are multiple labor markets depending on the skill sets and experience and everything else. And so now the U.S. work visas granted are 1.01 million in 2022, which is the highest on record. It had dipped down in 2021 during the pandemic and everything. Before that, it was about 900,000 that were out there. So it's about 100,000 above that now. But that shows you that with the weakness, the people that are not coming back, a lot of those with 65 plus, 8 years old with no disabilities, their labor force participation rate is still around 24%, but it reached 26% before the pandemic. So it shows a lot of them are sitting out. And so there's going to be more room for people to come in and fill those spots, including immigrants. That's why I think we need Congress to really act about legal immigration and have some key reforms that are market-based approaches. The labor markets are also plaguing other labor markets when you think about what's happening to the labor shortages and the strikes by Hollywood writers, auto sector workers, and others who are causing issues throughout the marketplace that could influence the shows we see, the movies, the cars that we can buy. There's already been a shortage and a backlog of that. So that's something else that could be contributed to, basically because labor unions governments force a lot of these folks to pay labor union dues, which actually end up hurting a lot of the people who are working and also the consumers in the process as we pay higher prices. So that's something that we really want to watch, moving forward as well. On the state side, so that was on the national. On the state side, universal school choice, the school choice revolution continues to expand. Corey DeAngelis, who's great on all these issues, he noted that North Carolina just became the 10th state to pass universal school choice and the first state without a GOP trifecta to do so. So states, if you're not already doing this, you're falling behind. Our kids are falling behind. And that is really the most important thing to me, is that they need the education that's going to best meet their unique needs. And, tax reform continues as well. Grover Norquist from Americans for Tax Reform noted that the North Carolina legislature, so again, some good stuff in North Carolina, they voted to further phase down their state income tax, personal income tax, to 2.49%, which is now going to be the lowest in the country, with Arizona's was the lowest at 2.5%. So there's a competition. So we have the school choice revolution, the flat tax revolution, and even the path to zero in income tax revolution. This is great news for people, for prosperity, and everything else. And so I think that's key. Remember, I also think we need responsible budgeting revolution, because if we don't responsible budget wisely and everything else, then we're going to have a problem with tax reforms, with school choice and everything else, because we're going to have less robust economies and futures for overall. So ultimately, this should put pressure on other states to act. Texas starts its special session on school choice in October, so should pass school choice before it's too late, and should do more to put property taxes on a path to elimination. Louisiana should also pass tax reform, the one that I've talked about here recently that was released by the Pelican Institute, before it loses more people and businesses. So there's a lot going on, a lot of things that I think we should be taking note of and making sure that we have the best path forward in our lives and our households and everything else. And until next time, God bless you and your friends and family, and let people prosper.